Hello, I'm Jason Bates, owner of Electrum Financial, where a mortgage is not just a flip of the coin. So if you're looking to purchase or need to refinance in the state of Arizona, I certainly would love the opportunity to earn your business. So please reach out. Watch us on YouTube. Don't forget to subscribe to the channel. Hit that notification bell. If you're watching this on Roku or on Amazon Fire, hit that 5-star review if you don't mind. And please share with your friends and family who are looking to purchase or need to refinance in the state of Arizona. I certainly would love to earn their business as well. Okay, so want to jump right into today's topic, which is down payment assistance. I'm getting a lot of calls on this as of recent, and there's probably a little bit of a backstory on that, to be honest with you. And so my theory is that these low interest rates have pulled in a lot of buyers who otherwise would not have been able to afford to purchase a home, because these low interest rates are creating these low payments or these low opportunities to get into purchasing a home. So this is a good thing, but it's also putting a lot of extra demand on inventory, which is driving these prices higher. And I've always said that low interest rates equal high price homes or higher priced homes. So with that, it's created this perfect storm. Now, down payment assistance is slowly being phased out, and it's not by the banks or the lending institutions. Actually the market that's dictating this. So what do I mean by that? Well, when you have down payment assistance, that is going to come with some restrictions. When you're asking money from a nonprofit organization to gift you money to put down on a home, that is going to come with some restrictions. And that is going to be your debt to income ratio, your FICO score are the two big ones that down payment assistance is going to come with. And when you have a lower debt to income ratio, or higher, I should say lower debt to income ratio than what you would actually may qualify for if you put your own money down, couple that with higher interest rates, because these down payment assistance loans, they do come with higher interest rates. And so when you factor those two things in with these higher prices, it's actually taking a big chunk of your purchasing power away. So down payment assistance, although I am a fan of it, it is getting phased out, and if you absolutely need it, you're going to have a difficult time in the Phoenix metropolitan area finding a home with down payment assistance. And on top of that, when you're making your down payment assistance or making your offer on your home on our pre-qualification forms here in the state of Arizona, I do have to mark that you are in need of down payment assistance. And when you're presenting that to the seller, that could be the difference maker, especially if there's a multiple offer situation, as many of these homes are in. They look at your offer and say, hey, there's down payment assistance. I don't want that one. I want to go with the person who doesn't need down payment assistance. It automatically, right, wrong, or indifferent, is going to put paint a picture in the seller's mind that you may not be as qualified as somebody else. Therefore, they'll take the other offer in place of yours. So I want to offer, it's not all doom and gloom. I want to offer some alternatives that you may not be aware of when it comes to down payment assistance. So want to jump right into that. So let me pull it up here. Kind of my own self-producer here, so forgive me if I'm looking away from the camera, but I want to go over the three main institutions that offer mortgages. And I'm not talking about banks and things like that. I'm talking about HUD, FHA, HUD, Housing and Urban Development, Fannie Mae, and Freddie Mac, because there are some distinct differences between the three of them, and they do offer down payment assistance. Of course, if you're a veteran out there, as I am, thank you for your service. Appreciate that. You don't need down payment assistance. There's 100% financing. USDA also is another program that's out there in your area. You may be familiar with it, not familiar with it. Not so popular here in Phoenix. Used to be a big program, but it's pretty far out now. And that's also another great program for low down payment. So let's dive into HUD first and foremost. So let me pull up HUD here. These are the HUD guidelines here for gifts as an acceptable source for down payment. You may not have known, but you can get a gift from a family member, and not just a family member. I know a lot of people say it's your family member, but it also can come from other sources as well, on a down payment assistance, or a gift, I should say, to help you with your down payment. So I want to scroll down here a little bit. I highlighted a couple things here, but an outright gift of cash investment is acceptable if the donor is the borrower's relative. This is what we talk about mostly. The borrower's employer, which you may not be aware of, but if your employer is you're going to get a bonus or expecting a bonus of some sort, and they advance you that bonus, hey, you can use that for your down payment. A close friend with a clearly defined and documented interest in the borrower, godmothers, godparents, godbrother, godsister, those individuals can gift you money. A charitable organization, and then a governmental agency or public entity that has a program providing home ownership assistance to low and moderate income families or first-time home buyers. Typically, that's your down payment assistance. Now, the donors do have to, excuse me for scrolling back and forth there, but the donors, this is one thing that can be a sticking point. The donors do have to show their ability to gift you the funds. That's an important distinction here, because a lot of people don't want to go to their parents, and then the parents have to give a bank statement to me, the lender, and they're sitting there saying, well, why do I have to give it to you, Jason? I'm not the one applying for the loan. I'm just giving them the money to buy the home. Well, we got to show that you, as the donor, have the ability to gift the funds. There's a lot of shell game going on out there where donors have a bunch of cash, and cash is not king when it comes to purchasing a house, unless you're purchasing the house for the entire amount in cash, then it's king. But if you're not, then a lot of lenders, or a lot of borrowers, I should say, give their money to their relative, who then deposit it into their account, and then they turn around and gift it back to them. Well, that's a big no-no. So the underwriters are going to want to see the donor's ability to gift the funds to the borrower. So that's why I know it's a little bit of invasion of privacy and people don't like to do it, but that's what we have to do in today's environment. So let's move on to Fannie Mae. Fannie Mae also allows for gift money, and let's zoom in on this one as well. But they also allow for gift money, and a gift acceptable is a relative defined as a borrower's spouse, child, or other dependent, or by any other individual who is related to the borrower by blood, marriage, adoption, or legal guardianship, or a fiance or domestic partner. So you notice this one doesn't have friends involved. This one's really just in relation to, got to be a blood relative if you're going to use Fannie Mae or Freddie Mac. Now, with this too, another little tidbit here for you is that Fannie Mae, Freddie Mac only require 3% down, where FHA is going to require 3.5% down. So you may not need as much money, or you don't need as much money if you're a first-time home buyer using Fannie Mae or Freddie Mac, and you have a 680 credit score. That's the little caveat there on that. Now remember, on down payment assistance, there's that restriction on debt to income ratio. A lot of them are at 50, even 45, 43%, depending on the program. And you may have to have a minimum credit score of at least 640. In most cases, there are some programs out there with a 620 credit score for down payment assistance, where on Fannie Mae, Freddie Mac, you just need a 620 credit score. However, to get the 3% down, you need a 680 credit score. But if you have a 620 or below 680, you could still get the gift. Just has to be 5% instead of 3% down. So hopefully that clears the mud there a little bit. Can be a little confusing. Just reach out to me. I'd love to go over your situation in detail to go over that. So there's Fannie Mae. Now I want to jump into Freddie Mac, because Fannie Mae is pretty narrow. It's a pretty narrow lane on Fannie Mae. But Freddie Mac opens the door a little bit here for us. So let's dive into Freddie Mac here as far as acceptable donors to gift. So gift funds or gift of equity, very, very similar here when it comes to the down payment, or not down payment assistance, but gift from a family member. The funds have to come from a related person, and the funds do not have to be repaid. It's kind of a restriction similar to Fannie Mae, Freddie Mac. But I want to go up here because there was one little tidbit here that I even learned when I got into doing some research here, which I was unaware of, which is this one here, number 13, borrower's revolving credit card. What? You can borrow money to borrow money. Wow, this is fantastic. Borrower's revolving credit card charges cash advances or unsecured line of credit used to pay fees associated with the mortgage application process. Example, origination fees, commitment fees, lock-in fees, appraisal, credit report, and flood certifications are subject to the following requirements. Maximum amount charged or advanced may not exceed the greater of 2% of the mortgage amount, or $1,500. Now, I will say this is a unique thing. This is actually pretty good. So if you're really tight on money, you've got some availability on your credit card, you can actually use your credit card to help with your down payment or closing costs there. So this is actually a bit of fantastic news. And I know they said, origination, things like that, but that's less money that you have to come up with. So I think this is a bit fantastic. And there's also some other things that Fannie Mae, or I should say Freddie Mac, here offer. So let's take a look at those real quick, and then we'll wrap it up here for you. So I just want to go up here to the beginning here. Depository accounts, of course, securities, retirement accounts, so your 401ks, 403bs, IRAs. You may not be aware, but you can actually borrow against those if you're a first-time home buyer. Government bonds, proceeds from a fully secured borrower's assets other than real property. If you're a realtor, 1031 exchange on this, but you wouldn't be a first-time home buyer in that situation, but you can use that. Proceeds from the sale of an asset other than real property in exchange for traded securities. Borrower's real estate commission. This is another big one that Freddie Mac makes a distinction of. They're actually allowing you to use, if you're a realtor, you're making a commission on the property, you can actually use the future commissions on the sale of that property for down payment. Now that's a big distinction because on real estate, the commissions aren't earned until it closes, but they're allowing you to use that money in advance for your down payment. So that's a big one there. I thought that was pretty generous of Freddie Mac. Funds from a trust, of course, individual development account, IDAs, also can be used, community savings system accounts, and then pooled funds. If you're living with a bunch of roommates, you want to pool your funds together, you can certainly do that as down payment as well. So cash value of life insurance, you can cash out your life insurance. Rent credits, if you're getting rent credits back, you can certainly use that. Trade equity, net proceeds from the trade-in of a borrower's previously owned residency also can be used for that. You can also, one thing that isn't said here, but you can also use, and I'm going to go back here because we're going to wrap it up here, but you can also sell assets, automobiles, paintings, things like that. If you're doing that sort of thing, though, just remember you got to keep a paper trail of ownership and the value and then the bill of sale. You got to paper trail that whole transaction, and then you'll be able to use the proceeds from those items to purchase a home for down payment. It's all about documentation when it comes to purchasing a home. And so keep the documentation. Can't stress that enough. I talk to a lot of people who don't keep the documentation, and then I say, oh, sorry, I can't use it as much as I'd like to use it. Can't use it. So for your situation, please reach out to me. I'd love to help you and go over your particular situation. Everyone's situation is slightly different. So I'd love to go over your particular situation and put you on the path to home ownership. So with that, I'll go ahead and end this week's